different scenario, right? So scenario 1, you have 4 positions, right, at 2.5% of account value. So if, let's say, people who said bear market, let's say bear market resumes and we have a pullback of 10%, let's say Fed raises by 100 basis points and says that inflation is still, you know, rampant, then all of a sudden we have a drop of 10%, right? We're revisiting recent lows. And then if all 4 positions are bullish, right, then you could be down 10%. Scenario 2, you have more positions, right? You have either, you know, let's say you have 6 positions, and sometimes, you know, you convert in your trades into investments, right? It's down 2.5% of your account value, but you say, you know what, it's a soft landing, you know, Apple is a great stock, it's going to continue going higher. So all of a sudden now you have 5% stop loss because you're realizing that we are breaking lows and yield inverts further, and you're out, right? So you have 10% drawdown, right? You're down 10% if the bear market resumes, versus you down 30%, right? Right. So for that reason, I always propose scenario 1. Since you don't know exactly whether we're gonna have a soft or hard landing, the most you should have is 4 bullish positions, right? If you think soft landing at 2.5% of account value, 10% loss. Right, because how do you determine 2.5% of account value? I propose again with trading in the bear market, it's coupled. All of the stocks are, you know, coupled, trading with high correlation to each other. Let's say you think, okay, we're soft landing, we're heading to 420, at least 420, right? Okay, so you have 20 points to the downside. What's your downside? Well, probably if you think that the market is going to get to 420, it's going to take a few weeks, maybe a few months, right? So then I would not assume 390 stop loss. I would at least assume, you know, 370, right? 2 weeks ago, we were at 370 level. So you have, you know, 30 points to the downside, right? You have 30 points to the downside. So you can assume 30 points to the downside. You can say, no, Vlad, I think bull market is gonna continue going higher. So you have 10 points to the downside. Or you can say, you know, this May low, you know, it's the low that the support last few months. So 20 points to the downside, right? So 3 scenarios on stop losses. So stop loss. Right, scenario 1, it's 10 points. Right, depending on your view on the market, right, and how conservative or aggressive you are. So 10 points versus 20 points on S&P versus 30 points. Your percentage of account value should always be 2.5%, right? You should never risk more than 2.5%. So average account is $10,000, right, in Tradespoon. That means 2.5%. You multiply this by 2.5%. That's 2.5%. That's $250. Right? So you keep it in a journal, and you basically make a decision. You never want to lose more than $250, right? It doesn't matter if you did 10 points or 20 points, right? Or you did 30 points. It's still $250. So now you have to determine on position size, right? So what's the position size should be? Well, if you say 210 points, 250, you can buy 25 shares of S&P. If you said 20 points, then you can buy maybe 12 shares of S&P. And if you said 30 shares, then you can buy 8 shares. So this is a very important distinction, right? you want to give yourself more time, right? Based on your personality, how aggressive you are, you will choose, you know, if you're very conservative, you'll say 30 points, right? You know, if you're a lot more aggressive, you're going to say 10 points, right? If you're day trading, maybe you'll say no more than 2%, you know, 8 points, right? Something along those lines. But you can clearly see that the loss should always be the same. So that means you have to decrease the position size, right? As you increase your stop loss, you know, it's inversely correlated to your position size. Very important distinction. This is the most common mistakes the traders make. They say 10 points, they buy 25 shares, but then they say, no, I'll wait for 20 points because I think this level will hold. And then you say, no, I think 30 points, you know, this level will hold or this level will hold. And all of a sudden, instead of $250 loss, here you're going to have a $500 loss, right? And here you have $750 loss. All right, you're converting what used to be a trade into an investment, right? How many of you have done this mistake? You know, where you always trade the same size, but you're pretty flexible on the stop loss. Where you kind of, how many of you it had happened before? Huayda, thank you. So how many of you done this mistake? Anyone? Just say yes. Just say yes if you've done this before, and just say no. You know, no means, you know, you always do 10 points, right? Or, you know, the first support, and every time it's you down $250, 2.5%, you're out. All right, so some of you, Carmen, thank you. Okay, so I encourage you to keep this table right in your journal, like before market opens, have a morning routine, right? That's what we do in our live trading room. Have a morning routine, determine these stop and resistance levels, and just write this down. You know, I'm either gonna do this scenario, right? There is scenario 1, scenario 2, right, and scenario 3, right? And, you know, most common scenarios. So then that's what you would write. Why the question is, what if you cannot juggle? You know, there's no, in terms of scenarios, you pick one, right? Based on your personality, usually, and your experience, you would make different selections. Me personally, I always give myself more room. So I always actually gonna go and, you know, assume that we're gonna drop 40 points, right? And I decrease my portfolio position size. You know, I've been trading long enough, and, you know, I'm getting older, so I'm more risk averse, right? So I always assume the worst, right? And I assume that we're gonna get to 360, which is a reasonable assumption, right? When I build this long-term position and you scale in and out of these positions. You can always be a little bit less aggressive, conservative, right? You can say, well, we haven't reached 370 in the past 2 weeks. Why do you think we're gonna reach 370 in the next 2 weeks? I mean, totally fine. Or you can say 380, right? So it just depends on your view. Nobody really knows where the market is gonna wait. Will it stop at 380? Will it stop at 370, 390 in the next week or two? Nobody knows, right? It all depends on the news on the Fed decision next week.